Hey everyone, and welcome to Earnings Cheat Sheet for Friday, January 30th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, we had a deluge of reports come in, but there's another wave this coming week. So, what do you have on tap for us?
Yeah, a few big ones, Google parent Alphabet, Amazon, and AMD.
All right, well, let's start with Advanced Micro Devices, or AMD, which is scheduled to announce Q4 earnings on Tuesday, February 3rd. Earnings for the chipmaker are projected to rise 21% to 132 per share, while revenue is expected to climb 26% to $9.67 billion. And here's why we're watching AMD. AMD is getting access to China like NVIDIA, but has been pretty quiet about that. So, has AMD been able to secure sufficient production capacity from Taiwan Semi? And while a lot of attention is on GPUs, we'll want to know how the server CPUs are doing. And Ed, I think investors are really looking to see if AMD is capturing the market share, particularly that Intel is maybe ceding. And they'll also be paying attention to the lucrative data center and AI business segments. And we also had Intel earnings earlier this month that were, I think, a little disappointing in terms of guidance. So, what are the stakes here for AMD?
Yeah, and one of the reasons why Intel was disappointing is because they couldn't meet demand for whatever reason like this. So that opens the door for AMD, supposedly assuming that the demand is truly high, that it'll do well on these CPUs, kind of thing, especially for servers. So AMD is big in CPUs, and they're also big in these GPUs, these graphic processing units. That's what NVIDIA is known for. Well, AMD is doing that too. So they have it in both fields. That's one reason why I think AMD has done pretty well recently is people go, hey, it's not just the GPUs, it's also these others. Things are turning around. I mean, they were sort of late to the party. I mean, whereas Nvidia's growth was surging, it took a while for AMD to really ramp up, and even then, it's still been a little choppy. So people are expecting good things here. Yeah, so they want to see strong numbers. They want to see a strong outlook. I assume everybody expects strong numbers. I mean, AI demand right now is tremendous, and I think near term is tremendous. Just see how that all is translating and what they see is going on going forward. And can they get enough capacity themselves? Because they have Taiwan Semi making their chips. So can they wrest enough capacity away from, say, NVIDIA or Apple or others that are also desperate to use that production capacity?
A lot of competition, especially with the custom silicon kind of entering the chat here. But we can see that ramp up and that choppy action you were talking about reflected in the chart here. AMD had a nice run after hitting some recent lows here back in April around the 76 point. Currently in a cut base with a 267.08 buy point ed. But would recent action here maybe look like a bit of a handle, or how are you approaching this chart with earnings ahead?
Yeah, I think this looks pretty good. Obviously, we'll see what happens here because it needs to make that move. It didn't quite break out, so this is going to be a handle in all likelihood on a weekly chart and a daily chart after tomorrow. It just needs to get there. So after some strong moves in higher volume for a couple of weeks, and the relative strength line is at a new high, it's pulled back a little bit, which is great because the alternative is that it breaks out just before earnings. I mean, I think in many ways, this is ideal. Yeah, there's some things on the left-hand side of the base. There's a heavy sell-off, but there's a lot of things going on. But the RS line is at new highs, or at least it was, recently this week. The growth is pretty strong. So if it makes a move if it breaks out, it would look like it would be actionable. So I think this is sort of what you want to see if you're not an investor already heading into earnings, a stock setting up but not breaking out.
And in terms of fundamentals, kind of middling EPS rating, pretty solid accumulation distribution rating, pretty good composite rating here. So, anything else jumping out to you in terms of the fundamental picture for AMD?
Yeah, the EPS rating isn't great. There was a quarter where they had a decline. I can't remember what the reason was for that, but it was a decline. A couple of years ago, there was earnings were down, so there isn't that huge track record. And the growth was solid in 2024. It's solid in 2025. are going to be when we get this report, but it's just not jaw dropping. It's supposed to really ramp up next year. So the EPS rating should improve. But yeah, we want to see that. I will note that on a forward basis, AMD is still more expensive than NVIDIA. And so that's something to keep in mind when NVIDIA has stronger growth. I mean, it's like, do you really think that, do you think AMD is going to outpace NVIDIA? And maybe it will. It has had a really strong run, but it's just something to keep in mind on that. Can it really deliver? People are expecting it next year. I mean, this year. I keep on forgetting we're in 2026 already.
We're almost through January
I
of
know. I'm a
2026, if you
little
can believe
behind.
it.
I'm lagging. I'm lagging.
All right, well, let's move on and take a look at Amazon, which will report Q4 earnings on Thursday, February 5th. Earnings for the e commerce giant are expected to rise 5% to 196 per share, and revenue is projected to increase 13% to $211.41 billion. And here's why we're watching Amazon. Can Amazon Web Services revenue growth accelerate again? And how much will CapEx rise in 2026? We'll also want to hear commentary on consumers and get more color on tariffs after CEO Andy Jassy recently said that those tariffs were beginning to push up prices as that pulled forward inventory runs out. And Ed, we call Amazon an e-commerce giant, but I think a lot of focus really is on that AWS unit. Uh, as we've talked about, CapEx spend has been a major focus for all these Mag 7 hyperscalers. So, what in terms are we seeing then with the tug of war between some of this high margin growth and massive infrastructure spending? And, Amazon also just recently announced 16,000 anticipated layoffs to really get in line with these AI efficiencies.
Yeah, I mean, Amazon, I mean, the e-commerce has sort of been sort of flattish. It hasn't been growing that much, and the tariffs are an issue. But yeah, the real growth and the real profitability has been in Amazon Web Services. Uh, it's sort of, so that Microsoft, which has been growing faster in its cloud computing Azure, that was just sort of in line. I think there was some of the disappointment. It's one reason why Microsoft is selling off this week because of that news, as opposed to. So is that a concern for Amazon? We'll see. I mean, we'll see. And also pretty much the same thing for Google too. So people want to know about that. Yeah, it really comes down to that. And what's going to go on for growth? I mean, growth is slowing considerably. There were some strong quarters, and it's really supposed to slow in 2026. So, can that really get some momentum, or is this the pace it's going to have? So that's just something to note, because the growth is supposed to be pretty sluggish in Q4, but then for the next several quarters as well.
And we're looking at the chart here, Ed. Amazon technically in a cup with handle base with a 248.94 buy point. But we talk about momentum. And when we look over the last year or so, I mean, Amazon hasn't really advanced much at all. So, what are your thoughts here on the chart? And yeah, I mean, what's going on with the technical action here?
Yeah, I mean, that's a good point. It just hasn't made a big move, and you can see the relative strength line being flat. Actually, if you go to a monthly chart, you see the stock just has not really outperformed. I mean, there was a period, I mean, depending on what time period, there was a period where it outperformed, but then longer term, this has sort of gone this decade, for us, it hasn't really outperformed. So that's just an issue. I mean, it could go on another run. Maybe you could say argue it's due, but it hasn't really made a big move compared to a lot of other names. And so that's just something to keep in mind. The up-down volume ratio is a 1.4. The AD rating is only a C plus, but a 1.4 up-down volume. So there's some recent action. On the daily chart, there's volatility, but on a weekly, this looks like it might be a 3 weeks tight. So that handle will also be a 3 weeks tight, it looks like, kind of thing. It's sort of like forming one in there. Yeah, so if it moved out, you could definitely be buying this. This can go on big swings on earnings. So that's one of the issues. They get this big move, and then, you might, but then you might see some reversals and stuff, because you can see last time it gapped up and then, ooh, it rolled over pretty bad. Last time it sold off. So it hasn't had, and it hasn't had a great track record after earnings. So I'd be a little nervous about that, something to keep in mind. But if it does move up, it would be actionable.
All right. Well, we'll keep an eye then on this 248 level here, then, Ed. Let's go ahead and move right along to Google, or it's Alphabet, if you're nasty there, Ed, which is scheduled to report on Wednesday, February 4th. The tech giant is expected to see Q4 earnings up 23% to 264 per share. And revenue is expected to rise 15% to $111.29 billion. And here's why we're watching Google. We'll want to see a sizable Q4 cloud computing beat. And of course, we'll be interested in 2026 capital spending guidance. We'll also be paying attention to AI search monetization trends and any cost cutting or hiring slowdown due to AI coding. And Ed, Google has really seen record breaking search revenue, cloud acceleration. I think Gemini 3 has been a really successful launch for the company, kind of reclaiming its status there in that realm. But with the stock hitting new highs, I think the market has a lot of questions about, uh, you know, getting that proof of AI is working. And I think a big question for investors too is how much of this is going to impact Google's ad business.
Yeah, I mean, so far it's been doing pretty well, but you just don't know. I think Google's growth is supposed to slow down considerably, uh, after this quarter. I mean, it's already supposed to slow some. I mean, well, actually, it's been a pickup this quarter, but then it's supposed to slow. So that would be an issue. It'd be a little lumpy. I'm not exactly sure why there might be some of that lumpiness, why that's forecast. Uh, there is obviously this one feels like this one, the market feels like Google is the hyperscaler that is making it work, in terms of, yes, they're spending a lot of money, but that Gemini and other things, it's working. It's not a negative, it's a positive. Obviously, there was some other positive news about antitrust and some other things that happened last year that pushed the stock up a lot. But yeah, so that would be the thing. Can the growth rate be solid here, make that keep going because there is a big step down, a little bit like Amazon, but Google's made a bigger run, and so if that does slow down, that would be that would be an issue. I mean, I think chances are it's not going to go on a run like it did last time. For one thing, it is now one of the very biggest companies in the world. It really, it's only I think it's second only to Nvidia now. So I think you might expect with slower growth and that mindset we already priced in the AI that is an AI winner. So maybe it doesn't have the same gain, but this one's acting the best of them out of the Magnificent Seven right now. So for sure.
Yeah, we're on the daily chart here. We could see Google stock broke out of a flat base, 328.83 buy point on January 8th. It's testing that buy point right now. It looks like it flirted with the 21-day line here on January 29th, but technically in the buy zone here, Ed. So, again, how are you approaching something like this with earnings just around the corner?
I mean, if you have a decent gain on this, no problem. But for people who bought the breakout, I mean, you're going to have a decision to make. I mean, there's no cushion. It's acting well. The RS line is hitting new highs. I mean, there's everything. If it weren't for earnings, this would be a buy right now, I'd say, because it's holding up well. I mean, it's in the buy zone, obviously. Uh, but you don't know. I mean, is this going to be a Meta? Is this going to be a Microsoft? It could go either way, or it could do one thing and then reverse the other direction, making it even harder to deal with. Yeah, so if it can show some strength after earnings, I think this would be actionable again because it's done so well and it's close to all these levels, but we just don't know.
Yeah, and I mean, it's had such a great run since this breakout back here in August, really respecting that 10-week line as it's catching up here. So, will be interesting to see if Google can continue to make a move post earnings. Those are some of the top names on our radar, Ed, but there's always more. Palantir also reporting next week on February 2nd. And this one, has been an AI leader, but with software stocks lagging, this one's taking a bit of a hit, trading below the 50 and 200-day lines, right at this 150 level.
Yeah, I mean, look, software's getting hit. It's not necessarily Palantir at all, but it's below the 200-day line. When's the last time I went through the 200-day or the 40-week line? I mean, it's like I go on a weekly here. It has been a long, long time. And so this is a level that I think that even long-term investors should be thinking about, well, maybe I should be taking some profits. Again, everybody has different mindsets. And if you're a long-term investor, you might be saying, I'm sticking with it. But it's just saying, and keep in mind, the valuation on this one is extremely high, but it kept on delivering and delivering, and growth is supposed to slow at some point. What happens then? Again, still to solid levels. It's still supposed to be solid. You know, this one could easily turn around again, say, no, no, we're different. We really are different. We're not like all those other software losers. I mean, we're going to make it all pay off. But it's just really some big drops. I think this is undercutting, and so this might now turn into a big double bottom base if it rebounded. I mean, I'm not sure because, but it has a long way to go to get to that point. Yeah, it did undercut technically by a few cents. So there could be something there if it rebounds, but it has a lot of repair work, and we'll just have to see. Can the growth go there? We know the commercial and the government defense business has been strong, but you can just see that RS line. It's really been falling. It's doing better than most software makers, but that's nowhere good enough right now.
And let's go ahead and hop on over to Eli Lilly reporting on February 4th. This one attempted a breakout here on January 8th. It's pulled back. It's trading below the 50-day line. But talk to me about Lilly because this one kind of seems to have the advantage in the weight loss market. But what are your thoughts here?
Yeah, and it took off, and you can see the huge gain it made after the last earnings report. That's it. Really, there was really a true breakout around 864, and so earnings came in, boom, and it ran up, then through the top of the base, and so it's still held above the top of that prior base. So it's still doing all that. There is some concern, like Novo Nordisk with its oral drug, that that has done well. Eli Lilly had said a few weeks ago, well, it's probably going to be pushed back maybe a little bit. I think people may have expected in March, maybe now it'll be April or sometime in Q2. Some more clarity on that, and just see how it's going to, and some other things, other progress that they're making because they have next gen drugs as well. So, the, you know, this is still holding up well for those who bought that recent breakout, either one of those breakouts, still things are okay. But this needs to set up again. It needs to get well above the 50-day line, maybe form a new base, maybe somewhere around the 1100 level would provide some kind of entry. This sure looks like a mini double bottom forming. There's a tiny little mini double bottom in there. I don't really think it's not long enough to be one. But we'll see. I mean, but it's also below the 50-day line. So it's at an interesting area. Recent buyers should have been out of this one. But yeah, this one still has tremendous growth. And so we'll be seeing, but it may take some time to set up again.
And you mentioned Novo, also earnings due there on February 4th. And again, this chart looking much different. It's really has struggled as it's been losing share of the market. But again, talk to me about the technical action because it came online with the oral weight loss pill. So, how might that change the game?
Yeah, I mean, obviously that provides a new jolt. I mean, it's sort of first because Novo lost its lead to Lilly in terms of people basically said, we like Lilly's drugs better. But now Novo has something Lilly doesn't. But what happens in a few months when Lilly has a drug out? I don't, and see which one does better. So that would be a concern here. It'd be nice to see this one set up around the 200-day line. It's had a bit of a rally. And so now if you can form a bottoming base that's mostly above the 200-day, 40-week line, then I think you'd have something. I suppose somebody could buy it if it has a strong move off of those highs, but we'll see. We'll see. I know how sustainable that is because there's a lot of overhead resistance. A lot of people who bought over the last year who might be saying, I want to get out. I mean, that's basically that. There's sort of a line right near the top. That's the 18-month line. And we use that because it's sort of a feeling that that's sort of the overhead supply. Once it gets past that, it's like people are holding it forever or given up on it. But there's a lot of people from the top who are down a lot and might sell any rallies.
Yeah, and let's go ahead and check one more name in this space. Illumina earnings there on February 5th. Another one, Ed, here looks like it's attempting a nice little rebound here. Had a nice move the week ending October 31st to break above this consolidation, a 111 pivot point there. it's had a very nice run. So thoughts here.
Yeah, I mean, this one, it's the profit growth is supposed to slow a bunch next year, so that's an issue, or this current year for 2026. Just see if it paused here maybe, because it is sort of at the top of this long base if you want to go back to, say, late 2024. So if it paused here for a while, you can sort of treat that, then I think that would be interesting. I suppose you could buy it off the breakout, but that would have been a pretty good run then. But I'd like to see it pause here and then see what it can do.
All right. Well, we talked about AMD. We have another chip name coming up next week. That's Qualcomm, due on February 4th. Again, this one, some choppy action. Looks like it's been kind of range bound here with the 184 level, maybe being a point of resistance. But that has sharply pulled back over the last month, trading well below key moving averages.
Yeah, some of the also ran chip makers were coming up, and Qualcomm was one of them. Some of these non-AI chip makers, but things have really sold off, and that one just needs a lot of repair work. It seems like, and it doesn't seem like the growth is going to be that tremendous. For the short run, for the next year and a half or so.
Yeah, how about another semi name with Rambus here? Again, another one broke out here on January 21st. It's kind of been a little volatile here since, but still technically in a buy zone. So, thoughts here?
Yeah, I think the time to buy it when there was a downward sloping trend line that was probably crossing around 100. Yeah, or yeah, something in there, or maybe when it crossed the short-term high, I don't know, like right there. Those were places where it seemed like a better entry closer to the 50-day line. I mean, it's pausing here, so we'll see. But where a bit like where do you buy it over 125? It just feels like I'm not quite sure where the what would be a good buy point right now. If it paused for a week or two, I'd feel nice and tightly. I think that there would be something possible there.
All right, how about a look at Take Two Interactive earnings there on February 3rd? And again, this one, Ed, falling off on trading action here on January 29th. Another one with some choppy action. Um, But yeah, I mean, again, software just not really a sector that's in favor right now.
Yeah, choppy action. And look, I think people are going to want to know when is. I mean, there's been some decent numbers here. But when is Grand Theft Auto going to come out? And so they keep on delaying it, and it's supposed to come out in November, which would be in the next fiscal. Which would be in fiscal 2020. Seven. So that's why there's this big gain expected. So that's what people are waiting for. So there'll be comments on that. Uh, but yeah, so this one is just really choppy. Doesn't it makes it hard to find a good place to buy.
All right, how about we look at Fortinet earnings there due on February 5th? Again, another one plunged on earnings a couple quarters ago and has really just seems like it's trying to find some solid ground here, but getting back above the 21 and 50-day lines, Ed. So some
Yeah,
positive
there's a
action
nice
at
analyst
least.
upgrade. There was a nice analyst upgrade. Said, I don't know, things are going to get better for them, or this or that, or some positive things. So it's holding those areas. I don't know. It's still well below the 200-day line, and I think just software needs to do a lot of work. And so I mean, it would need to get above the 200-day line and then form something. I mean, it just seems, but it'll be interesting to see because this is the first cybersecurity name. I mean, all those names look terrible. Well, anything in software basically looks terrible right now.
All right. Well, how about we head on over to Uber? Maybe that won't look as terrible. Earnings there on February 4th. And again, this one just seems to be in a downtrend after hitting a high of 101 back in September. Um, Self driving has been a big growth, potential growth driver for Uber, but doesn't really seem to be showing up here in the chart. And again, another one just trading below all the key moving averages.
Yeah, the problem with this is that you can spin a tail of, hey, they're doing a lot of things with partnerships. They're going to be a leader in self-driving and da 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 da. You can do that, but then you can also spin a tail. Uber's going to be just completely out of it. Whether it's Waymo or Tesla or something like that. Yeah, I mean, Uber does some stuff with Waymo, but Waymo has plenty of other partners, and so you can almost argue this could be an existential threat to them. So that just makes it hard. It also means that just that one reason why you have these big swings. And it also means that it's not just their earnings report, but every time any other company, every time Elon Musk talks, every time Waymo has a new city that it's into, there's things that can move the stock. The RS line has been struggling for quite a while. So it just has, and hasn't really made much of a move for the last couple of years, ultimately, the relative strength line, and it's on the downtrend. So needs to repair itself. It just has a problem. You can see the choppiness. Now, some of that's because it's gap earnings, and I think it's with investments, and so that makes it hard. I'm not sure how the underlying business is supposed to do next year. But that's why you can see these massive swings. So I don't think that necessarily tells the full tale. People care about bookings with this and future bookings, but it does. It's just hard when you could just sort of where literally everything's the same, but just people have a different view of it. It's sort of like the song is the same, but now everybody hate it. Everybody hates Katy Perry now. It's like, oh, okay, or something like that. It's just not as opposed to when you have stocks that move on vibes like that, it just makes it hard to know where it's going to go.
All right. Well, maybe the Perry reference not the best news for Uber ahead, but thank you so much for your insights today. We really appreciate it.
You bet.
And that wraps it up for this edition of Earnings Cheat Sheet. If you want more market analysis, be sure to tune into Stock Market Today. That goes live after the closing bell. Thanks so much for watching, and we'll see you next week.